Good morning and welcome to the last of our lectures in the 10-year Hence lecture series. It's nice to have you here this morning. Patricia Dinneen has focused on emerging markets for most of her 36-year career. She is currently a managing director at Siguler Guff Company, a global multi-strategy private equity investment firm with over $10 billion in assets under management. Dr. Dinneen joined the firm in 2004 to build the BRIC private equity investment business focusing on Brazil, Russia, India, China, and select frontier markets. She has primary responsibility for overseeing the due diligence, selection and monitoring of funds and co-investments for the firm's $2 billion BRIC strategy. Prior to joining Siguler Guff in 2004, Dr. Dinneen was at Cambridge Associates, where she led research, client advisory work, and due diligence in the emerging markets private equity, including performance benchmarking. Prior to Cambridge, she spent 10 years at British Telecommunications, where she was involved in establishing nearly a dozen joint ventures in the emerging markets of Asia and Europe. Before BT, Dr. Dinneen worked at Hughes Communications, leading business projects to extend digital data and TV satellite communications in developed and emerging markets. She has also held positions at the Rand Corporation and the White House. Dr. Dinneen holds a BA from the University of Pennsylvania, a Master of Science from the London School of Economics, and a PhD in economics from the Massachusetts Institute of Technology. Ladies and gentlemen, please help me welcome Patricia Dinneen.
Good morning. I am so happy to be here. And Jim, thank you for the introduction. That's all the past. We're going to talk about the next 10 years. And this is an exciting moment for me because my next 10 years are going to be the beginning of my next career, retirement. I'm turning 65 next month. And my next career, social impact investing. And I hope that many of you in the audience today will also consider careers in social impact investing. So what I'm going to do is talk for about 35 minutes. I promise I'm going to leave time for questions. Please think as we go through this presentation, what are the areas that you would like to focus on? How would you like to make the world a better place? What a wonderful place to start. This should be familiar to everybody in the room. This is the website for the Mendoza College of Business. Dare to ask more of business. So let me start by commending Notre Dame and the Mendoza School, and commending all of you who are already really trying to transform the world through business. If you look at the first bullet point, 51 of the world's largest economies are corporations. Huge power, concentration, wealth. That can be used for good. Second bullet, can business help transform the world? Certainly hope so. And I'm going to try to give you some ideas of how that might work. Here's what I'd like to cover, as I've said, in the next 35 minutes or so. First of all, looking forward, next 10 years, what are the big opportunities? Economic, social opportunities. How big? What's the scope? And again, think about where you fit into this. Next, the issues. Every side of opportunity has an issue. But the real critical question that I want to focus on is what role can social impact investing have in solving some of those issues? Exploiting some of the opportunities and solving some of the issues. Who are the major players? Well, we already know one of them, Notre Dame. Let's go through some of the examples. And I'm sure somebody in the audience must have some examples as well. And then let's look at what it's going to take to succeed, some of the critical success factors. And then finally, I want to end with some areas of further research. Hopefully that will inspire some of you to maybe continue your studies in this area. All right, before we look forward, let's look back. You recall the Industrial Revolution, the first stage way back in the mid-1700s? It took the United Kingdom 150 years to double the GDP per capita. And then the second stage here in the United States, it took us a little over 50 years to double GDP per capita. Now look what's happened in China and India. China, after the death of Mao, Deng Xiaoping in the late 70s, China doubled GDP per capita in 12 years. India, when it started privatizing in the 90s, doubled GDP in 16 years. Now look at the last bullet point and think about the scale. And remember, we're talking about impact, scale and impact. US, UK began industrialization with populations of only about 10 million. But China and India, each with about 1 billion people. So if you do the simple math, China and India, 10 times the economic acceleration on 100 times the scale in a force that's 1,000 times as big. Now that's looking back. Now let's look forward. Here is an incredible chart that projects what the world might look like by 2050. If you just draw an imaginary line about halfway across that graph, that's where we'd be in about 10 years. But I think it's important to look beyond 10 years. Look at some of these big trends. Let's start with the developed world, the purple bars. Back in 2000, the developed markets, the US, Europe, and Japan, accounted for about 78% of the world's output. But look at the trend, diminishing, 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 so that by 2050, the share will have fallen to 31%. But look at the green bars, the emerging markets, and I'm going to define these on the next page. The growth markets, the BRICS, which are Brazil, Russia, India, China, the huge, fast-growing markets, and then the additional 4 frontier markets that are joining the BRICS now as growth markets: Mexico, Indonesia, South Korea, and Turkey. If you look at those growth markets, look at the increase in the world's output over the next 20 or 30 years, 2,100%. Staggering growth, and just think of the implications in terms of wealth creation, in terms of asset allocation, in terms of your own particular careers. Huge implications for the world. I told you I would define these markets, and I'll define them in terms of their relative ranking in producing world output. So if you look at the chart of the world, this is based on 2011 GDP. Developed markets accounting for 62%, and then the growth market, 25%, and the rest of the emerging markets. And in that group, there are about 130 emerging markets. But if you look just at the growth markets, the yellow circle, China, by far and away the largest. And by the way, these are the charts from a Goldman Sachs presentation. The very same author, Jim O'Neill, who is the author of the original BRIC report from way back in 2003. And he just gave a presentation in Cape Town. I saw him at a conference just 2 weeks ago. And these are new charts that he's developed showing the growth markets. The growth markets defined as greater than 1% of GDP. So if you look at all of these markets and project what the world might look like in another 10 years or less, say by 2020, if you look first at the bars on the far left, the G7 is the developed countries, and that's the US, Europe, and Japan. Share of GDP per capita, largest at about 43%. Right next to those, the growth markets. Huge increase. And then the BRICS, and then 2 countries, the US and China, neck and neck. Now, what is not on this chart, but I will tell you the statistics, is the huge change in size from 2011 to 2020. China is expected to grow by $8 trillion US. US, only $3.5 trillion. The BRICS, $12.5 trillion. The growth economies, $15 trillion. These are huge numbers. Now, I don't know if anybody in the audience wondered about the little yellow bar. That's Africa. But it's not all of Africa. All of Africa is 54 countries. Just focusing on the Africa 11, the fastest growing, the largest and fastest growing. Jim O'Neill, again, the guy from Goldman Sachs who created these charts, claims that there's a huge opportunity in impact investing for Africa. And I'll come back to this later. So if we look at the real engine of growth in this wealth creation in the world, very simple, middle class. So how do you define middle class? It's not just how much money you earn. It's also your life expectancy, your educational attainment, your health care, and lots of other factors that I'm sure you can think of. But what is truly driving this engine of growth is purchasing power. And if you look at the bullet at the very top, the middle class is expected to nearly triple in the next 20 years. And if you look at the color coding and focus now on 2030, 80% of the middle class in the world are going to be from emerging markets. That has profound implications for asset allocation, for the transformation of business, for where you want to be heading for your next careers. This is a huge opportunity. Here is a chart that I'm not going to go through, and I do not expect anyone to challenge the individual metrics and scores, but this is, again, from Goldman Sachs, a global environmental scorecard. I said that being middle class is not just income, it's also a number of other factors. Look at the rows on the left-hand side. Look at some of the factors that are very important in this whole growth story, including political and economic and social parameters such as corruption, rule of law, openness to trade, investment environment, as I said, life expectancy and schooling, but also things like personal computers and number of mobile phones. And then finally, the last category in terms of research and development. I happen to think that science and technology has a critical role to play in impact investing in the future. So if you look at those 18 parameters and then score these growth economies and the US in the last column, the very good news is that the overall scores have been rising. So in 1997, the average score was only 4, and higher is better. The top score is 10. So you see we've still got a long way to go with some of these growth markets. By 2012, the average score was up to 5. Still a long way to go, but remember, it's not unidimensional. Okay, I mentioned a minute ago that in addition to the opportunities, there are also some extremely important social issues that arise from this growth. And I think everybody in the room knows what I'm talking about, but let's go through some of them. Youth unemployment. Many of these emerging markets boast a demographic dividend because over 50% of the population is less than 25 years old. Well, that's great if those youth have health and education, skills, jobs, and a good way of life. But if not, that could lead to horrible social unrest. The gap between the rich and poor keeps growing. It's horrible. Many businesses that have grown out of this success story are providing goods and services to the rich, not to the poor. So we'll come back to that in a minute. Pollution and climate change. I'm sure everybody knows what's going on in Beijing with the pollution scandals. It's just almost impossible to breathe when you go there. And there are ways to cut back. Remember during the Olympics in China, They closed down the coal plants. They drained the water from a lot of the canals. But the pollution is a very serious problem. Think about this. What if all these emerging middle class, these 5 or 6 billion middle class that are growing right now, what if they all want cars, at least one car, maybe 2 or 3 cars? What if they all want air conditioners? Think about that in terms of the poor planet and what it's going to do to pollution. Food and nutrition. Here's a staggering statistic. In India, something like 60% of the food rots on the way from the farm to the market. There's no need for that. There's technology that can do food processing, transportation. Water and sanitation, huge problems with waste management, with clean water. My hometown, Concord, Massachusetts, banned bottled water because of the carbon footprint. And even in Brazil, which has 15% of the water, fresh water in the world, you can't get clean water in Sao Paulo and Rio. Huge problems with sanitation. Accessible and affordable health care. How do you provide health care delivery to the rural masses? Not just oncology clinics, but simple things like eyeglasses, dental care, hearing aids, things that can have a huge impact on productivity. Education, and here I'm not talking just about pre-K, K through 12, I'm talking about vocational education. Again, youth unemployment, teaching skills. There's a wonderful example in Brazil called Anhanguera, vocational education with over 450,000 students now. And students are so keen to enroll. They pay tuition up front. It's a very profitable business. Affordable housing, the cycle of homelessness. And finally, it's staggering to me, this time last week, I was locked down in my house in Belmont, about 2.5 miles from the crime scene. Peace and security, a huge issue. The haves, the have-nots. For whatever reason, the terrorism takes place. And I summarize this as multi-dimensional poverty, overlapping dimensions of poverty. And we've got to find clever and innovative ways to break out of that cycle. Now, one of the things that I've been talking about is economic development, but let's talk a little bit about human development. The United Nations just published their 2013 report on human development, and they have identified 4 areas for the next 10 years that are really important so that some of these issues can be turned to opportunities. Equity, and that's women, men, black, white, brown, equity of the peoples. The other thing is greater voice and participation of citizens. We're so lucky in this country to have democracy, but how come only 30% of the population votes? We all have to speak up. We all have to participate more fully in the democracy, and particularly inspiring youth to participate, giving people a voice. I've talked about the environmental pressures. This is a serious problem for our planet, climate change. And finally, managing the demographic change. Now, I talked about youth, but what about the other end of the spectrum, the aging population? One of the most terrible things in life is to be homeless, but think about being homeless and elderly, out on the street, without anyone to take care of you. It's a terrible thing for a country to grow old before it grows rich. But there are things we can do. These are the 4 areas that the United Nations identifies for human development. So, talking a little bit about what the world might look like in the next 10, 15, 20 years, talking a little bit about the opportunities, the issues. Is there a role for impact investing? I think so. Impact investing covers a huge spectrum. It is neither philanthropy at the one end of the spectrum, nor is it pure capitalism at the other end. It's somewhere in between. And thanks to the Rockefeller Foundation, this is a very simple chart, but I'd like to go through it very, very quickly. The key definition: investments intended to create positive social impact beyond financial returns. So let's go through that. Providing capital, and mostly at this point, it's social impact bonds and private equity. Eventually, we'll get to publicly listed stocks, but it's providing capital. The next thing is intent. This has to be right up front. You have to state your goal to create these social benefits. It's not inadvertent or unintentional positive impacts. It's very important for the intent, because then we get to the point of measuring it. And in terms of measuring the impact, this is really work in progress. I'll tell you about some of the initiatives in a minute. But in order to prove that you are having an impact, you have to start developing a database, analysis, what works, what doesn't work. And finally, and very importantly, financial returns. Now, if you look at the spectrum at the bottom of this chart, all the way from below market investments, and that would be impact first, the area that I would beg you to really focus on is the other end of the spectrum. And here you are in business school. Think about business solutions that will provide attractive financial returns, at least at market rates, if not better, plus social and environmental benefits. My contention, and I've spent a fair amount of time, I'm still learning about impact investing, but what really resonates with me are the market-based solutions. In order to be sustainable and scalable, market-based solutions. Attracting the best and the brightest minds from business schools, from businesses, executives, operational people, entrepreneurs. Now, there are lots of other ways to save the world, not just impact investing. And I want to make sure that we understand impact investing is not just socially responsible investing or corporate social responsibility or ESG, environmental social governance. These things are all totally legitimate. We need all the voices. We need all the different ways to try to reduce poverty and make it a better life for everyone. And you've heard these expressions, triple bottom line, people, planet, profit. These are all legitimate ways to approach some of these big social issues, but they're not impact investing. Remember, investments intended to create positive social and environmental benefits in addition to financial returns. How large? It is a huge opportunity, and I'm delighted to tell you that every day it's growing larger. However, the reason it's growing larger is that because there are a huge number of people in this world that are living on less than $2 a day. 4 billion people, our brothers and sisters, living on less than $2 a day. Now, with a lot of those people, that's not impact investing. You need to clothe these people, shelter them, house them. People that are living on less than $2 a day don't have the opportunity to think about going out and starting new businesses. So that's triage. The really relevant range, and this is really hard for me to say because 4 billion people living in poverty. But once they get beyond that stage where they've got disposable income of maybe $2 to $8 a day, that's about 2 billion people, consumers. And think of the poor as consumers. Once they have that disposable income, then you can start talking about businesses. You can talk about healthcare and water and sanitation and education. So that's really a very difficult way to look at the world with that amount of huge poverty. But I think what's really sophisticated in impact investing now is trying to segment the market. Where does impact investing work? Where does philanthropy work? You need both. But one of the real motives for social impact investing is that no matter how much money from philanthropy and government support, it's still not enough to solve those social issues and to lift those 4 billion people out of poverty. So, what's the industry potential? Now, this is a slide that should appeal to you as business students. Here's an opportunity to make money and to do good at the same time. This is a very primitive economic model, but it's based on assumptions that are quite transparent, and anyone who wants the background document, I recommend it highly. It's published by the Rockefeller Foundation. They go through all of their assumptions about how much it costs to buy affordable housing units and maternal health and all the rest. And then they go up and aggregate how the demand and supply models, and they come up with an estimate of the total amount of invested capital. 400 billion to 1 trillion US dollars. This is big time. This is a huge opportunity. And even more importantly, the profit. 183 billion to 667 billion. Here is a huge business opportunity for bright entrepreneurial people. And look at the sectors. These are fun sectors where there's really an opportunity to learn from the past and develop new models. Affordable urban housing, clean water, maternal health, and education, microfinance. We'll go into some more details in a minute. But I just want to leave that chart for you to look at for a minute. That's staggering. This is a huge career opportunity. So, in terms of the examples of social impact investing, I already mentioned some of the sectors a minute ago, and I think that if you look across the spectrum, it's not just microfinance. Most people have heard of that. There's the first one, sustainable trade financing. This is a $65 million private equity fund in the UK. They only are aiming for sub-market rates, not market rates, but they've already made 200 million loans to 300 small and growing businesses. And for example, one of their projects is a coffee cooperative in Ecuador for smallholder farmers. And the revenue that they gain from selling the coffee, they use to sponsor projects in reforestation, education, healthcare, and community clinics. Low-income housing in Brazil, a $75 million fund. They build houses, especially after natural disasters. And then the clean drinking water in India, the microfinance. You've heard about microfinance, but microinsurance. There's a group called Leapfrog. It's a private equity firm. And they provide insurance for HIV patients and diabetes patients. And if they stick to a very rigorous regime, then they get insured. They can then go on and build businesses and get jobs. It's a very exciting project. There are countless number of examples, and I have a partial list of resources that I will leave you at the end of this presentation. So, in terms of the benefits, first and foremost, remember I mentioned the 4 billion people living in less than $2 a day? Yeah, we definitely want to lift those people out of poverty. And the ones that have already gained some disposable income, let's create jobs for those people, give them access to energy, increase their productivity. Agricultural productivity is one where there's a huge opportunity. I mentioned a minute ago the waste, the amount of food that rots, the productivity in terms of crop rotation, seeds, fertilizers, all the rest, and community development. This will have a huge positive impact, not just on the individuals, but the communities. And then one of the very important aspects of this is improving basic welfare for the people in need. And it's a whole a community enterprise. And look at some of the things that are included in this category. Conflict resolution. When you think about it, that's a very, very positive outcome. Difficult to measure, but certainly a legitimate outcome. Eradicating diseases and again, access to clean water and education about hygiene and health improvement, equality, empowerment. These are all benefits to the wider society. And then, of course, mitigating climate change. Instead of everybody having their own air conditioner, their own cars, let's look at more energy-efficient ways to run the economies and better transportation systems, fuel efficiency, conservation, and all kinds of intelligent ways that we can work for the benefits to society. Here's the tough part, how you actually measure and rate these impacts. The first one is very traditional, but the non-traditional part of it is which benchmarks are you going to choose, whether it's a high-yield debt benchmark or corporate debt. In venture capital and private equity, the net internal rates of return, the multiples of capital, and then, of course, the public indices. Those are on the financial side. Now it gets more difficult when you start talking about how you're going to measure the impact on the poor and the vulnerable. The group that's done the most pioneering work in this is called the Global Impact Investing Network, and I encourage you to go to their website. It's a very, very productive, constructive website. This is a group that was established in 2009 at the Clinton Global Initiative's annual meeting. And they've done a lot of very pioneering work trying to come up with metrics. There's also a group that's trying to develop reporting standards, the impact reporting and investment standards, best practices, coming up with databases and data collection, and then rating the different impacts. And of course, there's a lot of subjectivity here, but the global impact rating system. And a lot of this is work in progress, and I'm talking to students, so hopefully some of you will be inspired to work on some of this very important development and analyzing, collecting the data, and coming up with benchmarks. One of the slides that I missed, I want to go back to, is the players. Where's that slide? There, okay. So do any of you see yourselves in this list of players? And certainly Notre Dame is included, but it's an incredibly diverse group of players, all the way from philanthropists to corporates to universities and pension funds. The real leaders in this industry and the ones who coined the phrase, Rockefeller, Gates, Clinton, Omidyar. But then there have been a number of corporates that have taken up the cause. JP Morgan has published some incredibly important literature on social impact investing. And again, do a Google search, you can find all of that. The university is not just Notre Dame, but INSEAD has done a lot of work on social entrepreneurship. I'll be meeting with some of those people next month. My own MIT, I'm very proud. MIT has the Poverty Lab, started by Abhijit Banerjee and Esther Duflo, looking at the poor as consumers. They've published an incredibly fascinating and intelligent book called Poor Economics, explaining why a lot of our aid programs have failed because we don't think of the poor as consumers. Stanford, Harvard, and the list goes on. There are some big pension funds, particularly in Europe, PGM, Dutch pension fund, and APG, plus our own TIA-CREF, that have done a lot of very important work in impact investing. Families, and I'm going to pause here for a minute. I can't tell you right now But hopefully there will be a very important announcement in about 2 weeks about this group called 1K, 1V. It stands for 1,001 Voices. I've been working with this group, and it is in formation right now, but what I can tell you without divulging anything in confidence, it's a group of 15 or 16 high net worth individuals, families, who are used to giving away about $100 million each to charity every year, and they are upset now that it doesn't seem to be having a big impact. So they are trying to form a movement to attract other families, other high net worth individuals, to have an impact with the money that they want to invest. And I think it's going to focus initially in Africa, and it'll be focusing on healthcare and education. So more to come, but it's a very exciting development. Capricorn, of course, is the Skoll Foundation. There are other families and high net worth individuals, and I think that there is a natural affinity for a lot of the families, especially those that made their fortunes by entrepreneurial activity, operational excellence, and they can identify with building businesses in some of these emerging markets. The other very important group, and again, pioneering some of these development finance institutions, have been working in impact investing for the last 50 or 60 years. They just haven't called it impact investing, but high standards of environmental, social, corporate governance. And we know them, the World Bank, our own Overseas Private Investment Corporation, and the Commonwealth Development Corporation. There are also an increasing number of private equity firms that are working on impact investing, plus some private companies that are very proud of the contributions they're making to society, the non-government organizations that I mentioned a minute ago, and the very important bullet here is the last bullet. Every day there are more and more groups joining the ranks. And there's plenty of work to go around, so I'm delighted this universe is expanding. So now, pause for a minute. I've talked a lot about the opportunities, some of the sectors, the size, but there are enormous challenges and risks. Again, I'm appealing to some of the best and brightest minds in this audience. Agenda for research, agenda for careers. Barriers to information flows. There's another group that I've been working with called Partnering for Global Impact. We had our first conference last year in Switzerland, and the intent is to build a platform very similar to the World Economic Forum platform for the economic and financial world, but this for the philanthropy and impact investing world, bringing together all the different groups that are working on impact investing, sharing best practices, one-to-one meetings. And if you go on the website, it is a wonderful encyclopedia of the organizations and the spectrum, the wide spectrum of examples. Partnering for Global Impact. The next really important problem is lack of an ecosystem or an infrastructure for developing impact investing. Intermediaries, investment bankers, the whole ecosystem that we've developed in private equity. We need to develop that now for impact investing. And then deal sourcing. It's great to be able to raise a lot of money to invest in these markets, for example, Africa. But when you look at the deals in Africa that are ripe for investing, it's very few. The whole private equity industry in Africa, maybe only 27, 30 deals a year, and then fewer exits. So deal sourcing is really important. That's where we're really appealing to entrepreneurs, to business people who can source deals and create deals. The impact measurement and rating systems, as I mentioned ago, that's a huge challenge to come up with some metrics that people agree on. Managerial talent. You look around this room and what incredible talent. You've got excellent access to education to networks. But when you go to some of these emerging markets, it's very difficult to find people with the managerial talent to execute on a lot of these business models. And in a lot of these markets, we're not talking about early stage tech risk. We're not talking about leverage buyouts. We're talking about growth capital, building businesses. And what really matters is execution risk. And that's where it's very, very important to develop the skills of how to run businesses, operational efficiency, supply chain management, sales and marketing, things that you're learning. But we need to provide that kind of business training overseas. Scalability is one of the biggest challenges in this business. All the way from the microfinance, which is very, very small loans, to some of the water sanitation, power plants. Scalability, and particularly across some of the borders in these emerging markets. As I said, Africa, 54 countries, many of those countries small, and some of them are landlocked. So it's very difficult to scale across borders. The BRICS have an innate advantage of critical mass within their borders. But once you get beyond the BRICS, it's sometimes very difficult to scale. However, the sectors that we're talking about in impact investing, like healthcare, like education, renewable energy, information technology, and with the internet, there's a real opportunity now to scale way beyond what was possible 10 years ago. Exits and credible success stories. We need some early wins. And that's one of the things that I really want to focus on. Let's come up with some real solid exits, some financially attractive returns, some really tangible and some really compelling impact stories that we can then start using to convince people. And let's build a database, a performance database. When I was at Cambridge Associates 10 years ago, I built the first ever database to measure the performance of emerging markets private equity. Nobody knew what the real performance was, whether it was in Africa or China or India. So with about 14 of the big development banks, we built the first ever performance database. Now I'd like to do that for impact investing. And then in terms of government bureaucracies and restrictive processes, we also need to work very closely with government. Reform of policies, progressive policies, and the last bullet is heartbreaking. You take a country like India, there is corruption at every single level, even at the bottom level, at the microfinance level. People steal from one another, they bribe. It's endemic. We've got to really get rid of corruption. That's a huge impediment for social impact investing. So, in terms of what it's going to take to succeed, I'm sure after listening to this presentation, you got your own ideas, but let me just go through the ones that I think are really high priority. The one that I really personally want to spend a lot of time on is this base of the pyramid business models. Remember, I talked about the pyramid, the $4 billion at the bottom and less than $2 a day, and then that segment of the pyramid, $2 to $8 per day, and come up with some business models that work there, some innovative business models. Creative entrepreneurship. There's another group I work with called the Global Innovation for Science and Technology. It's sponsored by the US State Department, and it was announced by President Obama in Cairo about 3 years ago. And it's looking for the bright young entrepreneurs in Africa, Asia, Middle East, selects the best and the brightest from a competitive process, and then brings these entrepreneurs to the United States for boot camp, sharing best practices, learning about fundraising, learning about human resources, and the whole idea of creating a next generation of entrepreneurs who will understand these business models. Technical innovation, extremely important. The internet, using technology for solving some of these problems. Leapfrogging is jargon, but let me just give you some examples. I spent 10 years at British Telecom. At the board meeting in 1995 in London, the board members were having a debate around the board table on whether or not this concept of mobility would take off. 1995. And in the UK, people would use these big black boxes and put them up to their ear. They were empty. They were called poser phones. And it was a status symbol. Now, in China, there are about 700 million mobile subscribers. In India, about 500 million. And British Telecom thought that convergence was going to take place on the laptop. Wrong. Convergence is taking place on the mobile phone. Here is a great opportunity for leapfrogging. Think about the redefinition of banking, mobile payment systems. Think about the redefinition of retail, bypassing intermediaries. Think about a redefinition of healthcare delivery. When I was working in India back in the 90s, telecoms was just starting, and it took 5 years to get a fixed line. Now, there is broadband communications in India. There's a group called the Information Healthcare Superhighway connecting doctors, nursing homes, and hospitals. Broadband communications, remote diagnostics, remote surgeries, telecommunications. There's all kinds of opportunities in education, distance learning. My university, MIT, has its whole curriculum now online. You can get an MIT degree online. It's incredible. So there are huge opportunities for leapfrogging. Worker productivity is really key. Again, back to the healthcare example, one of my medical doctor friends said, what you need to have an impact in some of these markets is not oncology clinics, high-end cancer treatment. You need simple dental care and eyewear. There is a technology now that's being developed in Africa that collects used eyeglasses from the developed world, grinds down the lenses, and then refabricates them cheaply for healthcare and for eyeglasses for the populations in some of these remote areas. The other very sensitive subject, and I put this as politely as I could, alignment of interest. There is still a very important belief among many people in business that you have to make a trade-off, doing good and doing well. And I think that in terms of certain types of investments, certain types of business decisions, people still think that in order to make a lot of money, you may have to increase pollution or only serve the rich, disregard the poor, maybe charge higher prices for the poor than for the rich. I think that we need an open debate on this, and we need an alignment of interest. And one of the real contributions of the impact investing literature is to provide examples of where doing well and doing good are actually complementary, and that you don't have to make a decision, a trade-off. New investment models means not just coming up with different ways to deliver healthcare and education. I also want to throw out there some pretty radical ideas about how we might want to revisit the traditional private equity model. 10-year lockup with 2% management fee, 20% carried interest, and think about different ways of providing liquidity, maybe longer-term patient capital for certain types of industries and models, maybe a combination of public equities and private equities. Again, this is research in progress, but I think that for the whole impact investing industry, we have to come up with some clever ways to match the duration of the investment with the investment models. And then finally, 3 very important things that all of us have to contribute over our lifetimes: our time, our treasure, our talent. And I'm trying to make the decision right now of how I'm going to contribute all 3 of those to impact investing. I want all of you to think about that as well. Last chart before I open up for questions. And I told you 11:30, so it's right on time. First of all, I hope you've been thinking about this as you go along, what role you could play now and over the next 10 years. Some really important decisions. We need everyone. We need the best and the brightest. Identify what more you need to know. This is a very short presentation. It's superficial, I know, but I'm still learning. I really want to learn more about this, and in order to be more effective, I've been spending a lot of time networking, researching, but decide what it is that you want to learn more about, and there are lots of tools that are being developed, and maybe you can develop your own. And then I am going to close the same way I started, with a reference back to the Mendoza College of Business website. Ask more of business, ask more of yourselves. Thank you so much. I have time for questions if anyone has any.
You can, first of all, thank you very much for being here, and thank you for those thoughts. It's April, and people have been thinking lately about the tax code. I heard yesterday that Senator Max Baucus of Montana said he's not going to run for re-election in 2014 so that he can devote the next 2 years to revision of the tax code. It's an enormous tool to influence human behavior. And so, a 2-part question. First, do you see anything in the pending revisions that would either encourage or discourage social impact investing? And if you had a chance to, say, have lunch with Senator Baucus, what would you tell him? What would you say about that?
Oh, I'm so glad you asked that. I am so lucky. I grew up in a family where we never complained about paying taxes because we feel we're beneficiaries. But don't start me on the whole tax reform and the inequities of the tax reform. As a matter of fact, I did actually have a bullet point in here about tax code and tax laws. I took it out because I didn't want to divert attention from some of the other things. But I think that it is absolutely critical to integrate some of the social impact investing into the tax code. Now, I don't want the business models to be dependent on subsidies and tax breaks. However, I think that there certainly are some huge precedents that have worked. The Small Businesses Administration, tax incentives for pollution control, for energy self-sufficiency. Why not? For some of these social impact investing. And not just in the US, but elsewhere. And in a lot of the emerging markets, the countries develop these special economic zones where there's a tax holiday for 5 years, 10 years, to let the businesses get up and running. Back to the larger question about taxation, about wealth and redistribution, and all that. I deliberately did not talk in explicit terms about social justice, but it is underlining everything I've said today. And to live in a country where there are 40 or 50 million poverty-stricken people in our country, I'm not talking about emerging markets, in our country, people out of work and all the rest, not to do something about the tax reform And, it's just beyond understanding to me that we've got people in this country that are paying no taxes in huge businesses. I think the whole area of government policy, tax policy, has to be seen in the light of this doing well and doing good. And for whatever your motives are, and by the way, I didn't question the motives of a lot of the key players. There's some people, and I know in my own industry in private equity, that are doing it to help raise more money. But I think that in terms of the government, it would be very enlightened on the part of the government to provide tax incentives for youth training, for a lot of social impact investing. And by the way, and I'm sorry I'm diverging a little bit from your basic question, most of what I was talking about was emerging markets. But think about the poverty in the United States, in Europe, in the developed market, not just the youth unemployment, the poverty of the elderly and all the rest. And again, tax policy can help. And one of the things that I love about the impact investing is it's supposed to be profitable. Profit means paying taxes. So we're not talking about avoiding taxes. We're not talking about welfare. That's for the people that are living on less than $2 a day. But I think it's totally consistent with a more enlightened tax policy to have socially impact investments and that are paying the government in taxes. So I'm trying not to get in trouble on what I say about taxes, but I think there's a question in the fifth row.
You covered it.
Ah, okay.
I think we all have the global out there, but as you commented on in your reflection to Jim, there's just so much here. And I didn't even think of putting my hand up at first because I was still processing and overwhelmed. I just thought you did a fantastic job in laying this out. But one of my frustrations, having worked at the humanitarian side most of my life, is the assumptions. Like Michael Harrington once made this statement: if you're going to be poor in America, be poor with the majority. So in the 1930s, we got the Social Security Act, aid to families with dependent children. There's nothing stereotypic about that. In the 1990s, we have Personal Responsibility and Work Opportunity Reconciliation Act, which is, another part of governmental labeling that makes it very difficult for people to get out of that. Yet that's welfare policy, but in economic policy, we say we have to slow the economy to get inflation under control. So slow the economy means create unemployment. I just hope all the students here realize that every one of us have a handle here, because when we let those kind of debates go and don't challenge them, we just perpetuate the obstacle that this whole presentation has been about. Because people who look at poverty as behavioral rather than systemic dislocation, opportunities and access, everything that you detailed so scientifically is just so important. But we all can have a tangible role in trying to reverse that debate.
Absolutely. And one of my personal motivations, and I didn't put this in the charts, but as a Catholic social teaching, it's all there. The dignity of the person, dignity of work, sustainability, stewardship, and we all do have a responsibility. But what I'm trying to argue and trying to inspire is that people with the intelligence, the training, the skills in business can do so much more. And we've got all kinds of philanthropy organizations, government organizations, thank God, that are doing a lot to alleviate poverty and to make it a better world and to promote the common good. But I am really excited about working with business people who know how to run businesses and can use those skills for good. And I think we all do have a responsibility, but particularly people in business. And I keep going back to the tax issue and the gap between the rich and the poor. And, you know, Catholic social teaching, it's not a sin to have money, but it's a sin not to share. And I have to watch my language because my friends say that when I talk about income redistribution, it causes all kinds of problems and people get very agitated. But we're talking about sharing wealth. We're talking about creating wealth. And you saw those charts. I mean, huge wealth creation. But let's do it sensibly and generously with a real compassion for the poor and promoting people. And again, it's not just Catholic social teaching, it's also just good business.
Other questions?
Thank you. So before you were talking about managerial talent as being one of the key obstacles, and a few months ago I was actually in Nicaragua working with some cooperatives and experienced that firsthand, that the managerial talent is really a critical piece for some of those organizations and the members that they're serving. Mm-hmm. But my question is, sometimes at that point, is it too late if you know, you think about the lack of education or the lack of training for years and years, and what can you do at that point to really try and course correct?
Okay, the simple answer is never too late. And the phrase that I use over and over again, leapfrogging, it's not too late because luckily we have learned a lot in the last hundreds of years of how to accelerate a lot of this development. And I'm going to say something really radical, and I hope it doesn't offend anyone, but maybe the way that we did business 100 years ago, 50 years ago, 20 years ago is no longer applicable. So maybe rather than going back and learning all of that, we learn something new. I mean, what is the slogan for Mendoza College? The Catholic University of the 21st century. And even more radical, I think we have a lot to learn from the emerging markets. And the last thing that I'm promoting is that we would fly people in from business schools to teach people in rural Rwanda or Guatemala the way that we do business here. I'm talking about a new business model and training managers in the local regions. And one of the things that's worked empirically so well in emerging markets and private equity is having local teams with all the intellectual property that they've learned from the Western schools, but then applying it locally. So I'm very optimistic that in the future, for example, China is putting up new business schools overnight. India is putting up new business schools. And it's really important to locate these business schools that are going to be training the next generation in the emerging markets. So I'm not worried about running out of time.
I was just wondering about your take on risk, because you could want to be giving, you could be educated on important issues, but in the end, you could be held back by risk aversion. And when we look at some of the really big top-down projects that even large companies take part of, even these large companies that want to invest in developing countries will have, will partner up with, let's say, like the IFC to help arrange financing, to help, mitigate specialized risks. And as individuals, our risks are very focused, right? I mean, we devote our time, our money. So I'm just wondering, what resources could we as individuals use to kind of help us with that?
Okay. One thing you got to understand, differentiate risk from ignorance. Risk is a way of making money. High risk, high return, you've heard that. If you understand the risks, And if you can exploit the risks, you can make money. But you have to spend the time learning. And it's back to this question about local businesses. It seems that a lot of these emerging markets are high risk. But what about US Treasury bills? Negative return. So I think that risk is there. And there are whole dimensions. There's political, geopolitical risk, there's business risk, there's market risk, and there's corruption, all the rest. But if you spend your time learning about those risks, identifying those risks and exploiting them, and mitigating them, you can make a lot of money. But you're absolutely right. And what people always talk about in private equity is risk-adjusted returns. There are plenty of risks everywhere in this business, but if you can identify them, I think you're likely to be able to exploit them.
Other questions?
You mentioned earlier that in the next 20 years that middle class is going to triple in emerging markets.
I'm sorry, could you start again?
You mentioned that in the next 20 years you expect middle class to triple in emerging markets. I wonder how that's possible when a lot of these countries don't even have a middle class right now. It seems quite a stretch. So I'm just curious about how that...
Let me make sure I understood your question. You were talking about the middle class in the next 20 years and the countries that I didn't mention?
No, you said that middle class would triple in the next 20
right.
years. You expect that. I'm wondering how that's going to come about when a lot of these countries don't have a middle class. It's either the upper elite or the elite poor.
Absolutely right. And again, I left out a huge part of the world. Because just by focusing on the growth markets, the BRICS and the MIST, I left out, easily 120, 130 emerging markets. And there are a lot of those markets who do not have middle class. They are living in poverty. If you look on the World Bank website, I think there's something like 24 countries in the world that are sub-emerging markets where no middle class, living in abject poverty. And that's where it's really philanthropy. It's you've got to provide triage, you've got to lift those people out of poverty. It's not, I don't think they're ready for impact investing. And on the other hand, you always should have the dignity of the consumer in mind. And even people who are living in poverty should be treated with dignity and fairness and want to be able to consume. And if you give people the opportunity, and whether it's through tax incentives or some kind of subsidies, if you can provide some kind of innovative models that provide goods and services at lower affordable rates, then you can lift those countries out of poverty as well and increase the number of middle class. But this whole term middle class it covers multiple sins because, as I said, it was defined in the literature as between $10 and $100 a day, middle class. But we all know that that would not be substantial enough for us in the United States. That's $36,000 a year. That's not what we in the United States consider middle class. But I think the important thing is to focus on some of the growth markets where you can succeed in the near term, and then leapfrog for the next generation of emerging markets. Not to forget all of them, but maybe develop the business models now in the growth markets that can be applicable to the next wave. But the important thing, and this is one of the things that I've learned from the people at MIT in the Poverty Lab, is that even when you're talking about the aid programs for people living in abject poverty, think about them as consumers. and try to understand in a rural, remote village in India why people will spend money on television sets rather than food, because there's nothing to do in these villages. There's nothing to talk about at night, and so they go out and they buy the televisions. And think about people as consumers. Start thinking of the business models. And simple things like hygiene and healthcare, and some of these integrated business models that can generate wealth in ways we haven't even thought of yet. As I mentioned in one of those examples, taking the revenue from a coffee cooperative and using that to develop community healthcare clinics. So I don't want to forget about those 120, 130 emerging markets, but the impact investing is really focused on the ones where there is already a middle class. Okay.
Thanks. You mentioned briefly in one bullet point the issue of corruption. The U.S. Department of State issued a report recently that contained the shocking factoid that said some 40%, I believe was the figure, of U.S. aid intended to improve village life in Afghanistan didn't reach the intended targets, and that that money ended up in the pockets and the Swiss bank accounts of corrupt officials. What incentives, both positive and negative, what levers do we have to deal with corruption in those nations?
The greatest example for eliminating or at least reducing corruption is something I learned from one of my Russian colleagues who started private equity in Russia, one of our partners of the firm. And he said, when entrepreneurs learn that instead of gaining 1 times their cash flow by stealing, they can make 7 times their cash flow by private equity, all of a sudden, corruption takes a different meaning. I think that one of the most powerful ways to fight corruption is transparent business models, exits. But I mean, even in China, for years, the corruption, the intellectual property theft, and all the rest. But when the Chinese government realized that it was hurting them for theft of their own intellectual property, they've really cracked down. I think that good business practices can be one of the best ways to fight corruption. And I don't know how many people are familiar with the Foreign Corrupt Practices Act. No bribes taken, no bribes given, but it has had a huge impact on private equity in a lot of these countries. And if you talk to most law firms in emerging markets, the fastest growing practice, Foreign Corrupt Practices Act. CPA, yeah. And again, the example I gave earlier is heartbreaking, but in countries like India, 1.3 billion people almost, and at every single level, corruption. It's got to be handled. There've got to be penalties, but it's not just the penalties, which is the Foreign Corrupt Act. I'm talking about the benefits. Once people see the benefits of transparent businesses, impact investing, I'm hoping that that will have even a more important impact.
Patricia Dinneen, thank you. Faculty and students, a small gift.
Thank you so much.
Thank you for your time and attention this semester. Best wishes with finals.
Thanks, everyone.